Good afternoon, guys, and welcome to the podcast. I'm really excited about today's guest, Ryan Floyd. He's out of the greater Boston area, and he is a portfolio manager at Barca Capital. He's a Yale alum. I'm really happy and excited to have him talk to the audience and where we are today, markets, etc. Ryan, welcome.
Thanks for having me. I appreciate it.
Yeah, briefly chronicle your journey, and I'm really excited to dive into your work.
Sounds good. I grew up outside of Baltimore. My dad was an engineer and my mom was a computer engineer. I played lacrosse and some other sports, and I was on the debating team. And our coach encouraged us to route a lot of the arguments around history and international issues with kind of a sneaky idea that people might not understand things beyond our borders. It was a lesson that stuck. It really stuck. I ended up going to college and studied history, read these thick books, which were wonderful. I lived in Spain one summer, which was delightful. Went to lots of cafes, enjoyed time outside. It was amazing, but it wasn't quite adventurous enough. After college, I decided to have an adventure, and I must have emailed, this is before LinkedIn, something like 1,000 people in India saying, I am a guy, I spoke some German and Spanish, hire me and maybe I could do some international stuff for you. I was 21 or 22 and I made the choice. At the time, it seemed like my friends were learning Mandarin, Arabic, Spanish. Believe it or not, this was 2002, 2003. People still thought India was just the land of Mother Teresa everywhere. I'm exaggerating, but no one really saw the potential. So I thought, let's try to work for a company based in India, have an adventure. I studied Hindi over the summer. I was probably about as good as a 4-year-old, maybe a 5-year-old, but I could read and write. Ended up getting a job with a big industrial company on their agricultural desk and helped develop a pomegranate and fruit export business,
Hmm.
if you can believe it. I'll pause there if you have any questions, but I ended up coming back to New York and can continue the journey. But that took me up with some sort of interest in international issues.
Yeah, really fascinating. A lot of the debaters I went to school with were some of the smartest guys, went to law school, investment banking. It seemed like economics, politics, history is the thing to study as opposed to STEM. But
STEM was good too. I always liked math and science. I I don't know if we were the smartest people around. We weren't the coolest people around. We weren't going to be on the cover of any movies, but it was fun. It was interesting. It forced me to have to articulate lots of different problems and issues into one singular idea. That's helped. And certainly begin reading all kinds of things in high school that I ended up using later in life.
yeah, and I'd love to talk about your investment firm because how does Barca Capital, with so much opportunities out there, what's your investment thesis? How do you distinguish yourself from other firms? So
Sure.
you set the
Sounds
stage.
great. So I have to say, in terms of compliance, but this is not an offer to buy and sell any securities. But after being in Bombay for about 2 years, I took the bus each way. I got a little bit better at Hindi. I met a guy that said you might be interested in international finance, and I didn't know that much about it. So I did my thing and contacted all these people, did all these Skype calls late at night. Ended up working for a brokerage firm. The only spot they had open was to be a salesman for stocks in sub-Saharan Africa, and I jumped at the opportunity. A lot of the countries seemed overlooked and with potential for other people. So they handed me a client list, which was amazing as a 24-year-old, and I read everything I could find on investing and traveled a lot to sub-Saharan Africa and then interned through Asia, meeting with all kinds of CFOs and CEOs and then bringing them around America. It was really an amazing experience, but I became quite close with a lot of investors based in America. And I kept having this one conversation over and over again, which was something like this. Believe it or not, I went to this country, let's say Nigeria or Tanzania, and I met with some very sophisticated corporate managers. There were very interesting companies there. And here are the financial statements. They're audited by a big four. They pay dividends. They're growing. And very often a fund manager would say, Ryan, that's really interesting. I'd love to look more at it, but we have structural reasons that we can't look at companies like that. One, our investors won't let us do it. Our documents aren't set up in the right way to enable us to do it. Our liquidity terms aren't aligned, and it's scary. And I don't really want to read about the history of this or that place. It's just not worth it to me. So it seemed after having so many of these conversations, there was a real opportunity for someone to structure an investment business that had the proper setup to look at, let's call it unusual things that are a little different than the typical investment business or that you might find elsewhere. And believe it or not, the world isn't that different. This is almost 20 years later. We still have these same challenges where there are other funds that aren't structured in the right way. Their documents aren't set up in the right way. They have restrictions on what they can own and liquidity issues. I'll say in very broad terms, we look for companies that seem to be able to grow and produce good free cash flow, but are for some reason overlooked or not appreciated by the broader investment community. And that's a tremendous number. There are all kinds of companies all over the place. And we primarily look at emerging and frontier markets, but we have flexibility. We can look at anything really.
Interesting. So a follow-up question I have for you is these strategic investment opportunities, are they mostly in the United States, or I don't know, China's kind of in past, but are you looking at India, Africa, other markets? Talk about that.
Yeah, good question. I don't know if it's right, but what I always have thought is it's much easier. I'm not the smartest person in the world. I can walk and tie my chew gum at the same time, but I don't want to compete against the smartest people in the world because it's just very difficult. There's so many smart people in the United States, and just you mentioned it in China too, that if I have to find some unusual stock against an American fund manager in New York, listed in New York, it's very difficult. And so I've always thought, I don't know if it's right or not, it's much easier to try to focus on places outside the United States that might be overlooked for some sort of structural reason or overlooked for some kind of reason where I can have some ability to analyze it a little differently than others. I haven't done too much in China. I have tremendous respect for the ancient civilization. There's so many smart entrepreneurs. It just hasn't been my style, but I think the country has an incredible long-standing history of entrepreneurship and economic growth, honestly.
Yeah, interesting. And then another question I have for you is, what type of clients come to you? Are they mom and pop investors? Are they tech savvy? Are they doctors, lawyers, dentists, accountants? Who comes to work with you?
Oh, this is a good question. And again, for compliance reasons, I'm not actively seeking all kinds of investments out there. So for informational purposes, we
Okay.
have to say this kind of thing. The structure of our fund, I don't remember the exact name, but the structure is that we have to have sophisticated investors that qualify by some definition, I think in the US government of what that means. And it's some amount of capital and assets under management. I would say, generally speaking, what has worked the best is that I'm not doing everything for all people. So we're not trying to do the same thing as every other fund. And it's been helpful, generally speaking, to do something very different, do something that's interesting and fun and not the same that you would find in other investment firms. And it helps, very generally speaking, to have partners along the way that understand that and with some, let's say, sense of curiosity and flexibility. What I always say also is some comfort that if some terrible thing in one of the countries where we have an investment all of a sudden is on the cover of the New York Times, someone is not losing a tremendous amount of sleep, because that happens occasionally. It is, life throws those things up sometimes if you've been around the block long enough.
Yeah. Yeah. Yeah, it's interesting. You're the first guest on the podcast who isn't. Most people come on, especially a sponsored one, just they want to promote. And obvious one thing is interesting is you have a very interesting. I love your company values, and one of them is
Thanks.
yeah, it's we'll talk about this, but you talk about this. How are you viewing AI in just companies? Obviously, these sprouting up, and there's so
Sure.
much. How do you view it?
It's a good question. It's really fun and interesting. So what we do internally within our firm, I really encourage an experimental mindset where we should try different tools and see what works and doesn't work and try to learn from other people through conversation and also from, I don't know, reading other articles and trying out whatever works. But I've found that tinkering really is the best. That you say, this one seems to do better with reading PDFs. This one seems to analyze data and make graphs a little bit better. I have found personally, I don't know if this is really true, but my hot take is something like this. AI is really interesting and revolutionary. It's certainly, I use one of these products at least every day or every other day. But I think some of the current, I think when someone says this has totally changed everything that we do, we've restructured everything, there are a lot of prominent examples that hasn't totally worked. So my the way I've been thinking about it is something more like incremental change. There are
Mm,
certain things that it works really well for, certain ones digest words and it's helpful for editing very quickly. And this is very powerful, but using them to, and I haven't found it very helpful to analyze a very complicated spreadsheet and give me any answers that are different than, I don't know, a very smart intern. I think that will change in 3, 6, 9 months, and we should be ready for that and certainly stay ahead of the game. I think from my seat, it continues to be helpful just to have a structure and an outlook on life that is different,
mm.
even as more data becomes available. A lot of people still have difficulty accessing, I guess, in investments when it's not that easy. I know that sounds strange, but still the case.
Interesting. How do you view the business? Because there's like old established, very you have J.P. Morgan, McDonald. Again, it's not advice, but how do you view these businesses that are legacy versus businesses that are on like the change and evolution, like the Meta, the Googles, the Apples? How do you
You
reconcile
mean
those?
from an investment? I'll answer it in two ways. One is that even though I've been doing this now almost 18 years, it still feels very fresh. It feels new and as if I'm not going to take Jeff Bezos's line, but it's like day one, you have to reinvent yourself. You have to stay fresh. You have to move and evolve and use new data that becomes available or new sources of information that's publicly available. So I think if you don't evolve and don't change, things get very difficult and complicated. I don't want to read too much into it, but what I've seen is that the AI world unlocks a lot of creativity for smaller teams that become a little more challenging for bigger teams. And I'm generally predisposed to like something that's a little smaller, more nimble, more creative. Big entities can do that too, but I've always had a predisposition for that personally. Having said that, from the investment side, we look at all kinds of different sectors. I like people say there are many ways to heaven in finance or investing. It's not the best example, but something like this. So we look at all kinds of things. I haven't really focused on AI as an investment necessarily,
Hmm,
but
interesting.
it's more like a tool or something that I think will certainly shape the way we think about the world. But I'd say now, having done this for many years of hundreds of examples, we'll look at lots of different sectors in many different countries.
Interesting. Another question I have for you is this idea because what's interesting is you talk about cash flow over EBITDA, and why do you not trust EBITDA?
Good question. I have a kind of soapbox issue related to this. EBITDA is a nice shorthand, and I think it was created a long time ago when there were cable buyouts, and EBITDA was a shorthand for free cash flow or like the cash available to the business because of various issues. And I think generally speaking, it's misused as a term. It can be a helpful shorthand for cash profits or maybe cash profits before tax, but unfortunately, I think it's misused or manipulated, particularly in places where certain costs are not accounted for with the term. So in the United States, generally amortization of options are not included. So that can be a tremendous cost. And if you're not including that in EBITDA margin figures, you're missing a lot. It's saying, I'm doing great, except my arm got chopped off this morning. It just doesn't, that doesn't
Yeah,
I don't know. That's not wonderful. And then in other countries, often R&D it's called capitalized and amortized. It means that it's not really counted in EBITDA figures either. But R&D can be substantial for a number of software companies. So using EBITDA margins is kind of like saying, I cut my foot off, but I'm doing just fine today, but I'm fine X my foot. That I don't think that's just a lot of it's a good discipline. So free cash flow, there are different ways to calculate it, but it's generally the profits of the business after CapEx, after investment in intangible assets, after changes in working capital, and after leases, at least the way I calculate it, sometimes after interest payments. And that's the capital available to the owners of the business or the providers of the capital to the business, depending on how you calculate it. I know this is really in the weeds, but sorry if everyone's sleeping. It's just too much in the weeds. But I think it creates a better discipline. If you're really looking after all of those costs, it's just a more disciplined way to look at a business than something just crude like EBITDA margins and EBITDA multiples. And
Interesting.
it's very unpopular
Yeah.
viewpoint, believe it or not.
Yeah. The other value I really love is when you talk to potential investors, you talk to them to beware of fast talking people with pedigree resumes.
Yeah, that's
Expand
right.
on that.
Yeah, it's a good point. It's funny that there's this discussion of corporate culture. Culture is very powerful term. Culture can often be described in funny kinds of ways. Sometimes it means we hire the best, we hire only the best resumes and people that are very slick. I hope I'm not talking too fast here. Maybe I'm beating my own definition, but I have just found often when I go to a meeting and the person is very slick and put together and has some pedigree resume, however you define that, and is talking very quickly and has a really fancy presentation, there's something just off about it. It just doesn't feel right. And this is not based on any data, but often avoiding more and more of those is a good choice. And so the flip side is that often the things that you would think are not so great often can be very good. Like I've traveled a good amount in Vietnam, for example, and the corporate culture, often people are not wearing very fancy clothes and are very humble about their experiences. They're not very flashy, and yet they're great managers there. We don't have any investments there, but nevertheless, I've always liked that difference where I think we should always be humble about what are the things on the outside that correlate or don't correlate with greatness. Often we're quite surprised, I think, with what it is.
Yeah. It kind of reminds me of the Wall Street guys, and some of those guys end up in jail for white collar crimes. But what's interesting is I'm interested to pick your brain on what are your thoughts on Bitcoin, gold, and what's happening in the economy today?
It's a good question. I don't have strong, very sophisticated opinions. I have found that Bitcoin is something it is almost like gold in India or in Vietnam or Indonesia, where people own it because they don't necessarily trust the fiat currency, and
Hmm.
it's a little easier to own it than it is to own gold. As an investment, I don't have any idea if it's overvalued or undervalued or what, but
Hmm.
it seems to me that it is something like a proxy on the faith of fiat currencies. Gold is really interesting because it brings up such strong passions that there are some people that just hate conversations around gold. And then there are other people that think that it is the only store of value ever. I'm somewhere in between. I will say, from my seat, what's really fun is if we just pretend that gold is a currency, and I think we can think that gold's a currency because currencies over time have been pegged to gold, and many people in many countries treat gold like a currency, basically, one way or another. They're storing something with physical gold, or their gold jewelry is seen as a physical investment. Up until the 1970s, the dollar was pegged to gold, and then now let's consider it a free floating currency. If we just put that in the denominator, the dollar value of gold, and look at various things over time priced in gold, the shape is wild because it ends up looking like lots of things haven't really increased and the in gold equivalent ounces. And that means like home values in dollars, they go way up. And I don't know, healthcare costs go way up. And
Oh, education.
even S&P 500 education is another good example. All kinds of things. I'm not a conspiracy theorist or anything, but if you price these things in gold, they just look like an EKG without much of a trend. Like it's just constant,
Yeah.
which sort of suggests that a lot of increase in asset values is just what that is. It's more of an increase in asset value than actual signs of improvements in value, which
Yeah.
is depressing because a lot of incomes haven't really grown in terms of gold for a really long time. I
Yeah.
see it more of an input of analysis. We don't use it that much at work, but it's fun to look at revenues over time in gold. Is strange. If we lived in the gold standard times, what would that look like? And it's interesting. Sometimes something that you'd think is growing really rapidly, actually, when you price it in gold, it looks like a slow drip or slow decline.
Yeah.
I don't really know what the solution of it. I don't know where this takes you. If you take it to the nth degree, it can be extremely depressing. I don't really necessarily go there. Like obviously, the healthcare is better now than it was 100 years ago. So, we can't, and like having air conditioning in your home is better than not if you live in a hot place. So let's not say that this is worthless, but
Yeah.
nevertheless, I think it's good. I don't know. These things are interesting. It's a good question because you really get to hear
Yeah.
what someone really thinks.
Yeah. Yeah, it's quite interesting how you talk about pricing things in gold, silver, real estate, and Bitcoin. And if you look at you like comparably, it's basically you look at the weakening of the dollar, the purchasing power. That's why everything is just going so expensive. And then incomes haven't improved that much. And then you've got like taxes and all this. And that's why a lot of people are struggling. How
I
can go
That's a
ahead?
good point. Yes. I think this is real. And I do think that pricing things in gold gives some sort of secret of maybe the real improvements of a lot of asset values over time.
Yeah.
This is a very controversial viewpoint, but I don't know. That's okay. That's what life's all about.
Yeah. Yeah, I think a lot of people are waking up to this reality that we are discussing. How can people find out more about Barca Capital, see your team, learn about your values, insights, you got interviews and contact you?
Sure, thanks. It's Barca Capital and BARCA. A lot of people thought originally that we had some affiliation with the soccer team. It's just no, I didn't even know it when I named the company. It is what it is. So we're at barcacapital.com. Feel free to reach out on there. And I'm on LinkedIn. My name's Ryan Floyd. Feel free to say hi on LinkedIn. And yeah, I welcome all feedback, positive and negative. I've enjoyed the conversation. Thanks so much for doing it.
Yeah, I really enjoyed this. Very insightful, and for the audience, it's a sponsored episode, and Ryan's resource will be in the show notes. And again, thanks so much.
Yeah, thank you.